Hey you, this is Caio and welcome to the Money Project. Today I want to share with you a few ideas about the futures markets. And futures markets basically is consisted by futures contracts. And this is a way that you can guarantee that in a specified time in the future, specified date, you're going to be able to buy a specific asset in the predetermined price. And it's good to see that we have a lot of assets that you can trade into those futures contracts. For example, you can trade bean, you can trade dollar, you can trade bitcoins, and a lot of them. And I'm going to be sharing it with you with more details in this video, okay? But before I go into the content, I need to remind you to subscribe, click on the bell, click on the like button, and share this with a friend. One friend, please do. I'm asking you to do this if you could help me. And this is also a way that YouTube is going to understand that you like this type of content. Also, don't forget to follow me on my Instagram account. This is my personal Instagram account, and you can follow me because there I share my daily routine. I share some ideas that I have and everything. Like it's just you can see myself really like a friend of mine. And going back to the concept of futures contract, we need to understand that they are standardized agreements traded usually on exchanges, in which one party agrees to buy in a specified date some amount of a currency or a product like beans, for example, and the other part agrees to sell in that specified amount of money in the specified date. And there are plenty of ways that you can use the futures market for a lot of reasons. We have a lot of different players into the market and they do different strategies with that, okay? There are some people that only want to protect, for example, from inflation of dollar, of, for example, the valuating of prices when comparison with euro. And there are also those players that all they want to do is to receive their product, for example, soybean, being protected to the price. And this happens a lot. But I'm going to give you an example now. A company that buys a machine in dollar, but it's located in Europe and receives all their income in euros, might be afraid in case the euro devaluate in the pair with dollar. Why is that? Because if it does happen, this person is going to end up paying much more than expected in euros, that is the currency that they receive, that they were expecting, because the machine that they bought is quoted in dollars. But how this company can protect itself from this price movement? What they can do is just go to a bank and say, hey bank, I want to lock myself into dollar. And the bank is going to go there and buy futures contract to that company. And then this company is going to be completely locked in terms of price fluctuation. Obviously, when they do this, they pay a premium for the bank for their work. But it's better to pay this premium knowing how much is it than only losing completely all the money with a price fluctuation that might happen. For example, if 1 euro today was equal to $1, for example, and tomorrow 1 euro was equal only to $0.5, this company would just double their debt with the machine that they bought in dollars. In this case, this company is in a real company that's really trying to protect against price fluctuation. On the other hand, there are also people who all they want to do with those futures contracts is to trade. And it's something completely possible, and I'm going to get into details of it. But basically, they want to make some money with the price fluctuation of those contracts into a short period of time. For example, 1 hour, 2 hours, 5 minutes, or 1 day, 2 days, whatever. Those people, all they want to do is make some money, make some budget so they can really put more money into their account and be able to invest in their portfolio for long term. But understand one thing. The deal behind trading futures contracts is that the exchanges, they allow you a lot of leverage. And when you have a lot of leverage and do not have experience as a trader, you definitely are going to be into really serious problems. And this is the secret behind futures trading. You need to be really careful with the leverage. If you are not leveraged at all, if you have all the money that the contract that you are trading is holding, maybe you do not have so much problem. It's not going to be that big deal for you. But if you're using too much leverage, that is the case. That this is how we do our daily routine as traders. You might have some problem if you do not do the correct thing. Also, another thing that I want to emphasize here is that actually you can just trade almost everything into futures contract. Not only trade, but hold almost everything into futures contract. So we have today futures contracts of oil, of gas, of dollars, euros, and even Bitcoin and other crypto. Actually, talking about Bitcoin and crypto, I would invite you to watch a video where I explain the concepts behind Bitcoin. And this is for newbies actually. If you already know, if you already understand, this video is not for you. I'm gonna record another one. But if you are a newbie, watch this video because something really cool. I really believe that you might take a lot of advantage by learning about Bitcoin, blockchain now at this point, because in the future this is gonna be a really huge product in the world. It already is, right? But it's gonna be, in my opinion, even bigger than it is now. Maybe you're not a company, you're not a trader, so you might be thinking, well, what am I getting with this? Well, hold on. If you have a portfolio, if you buy, for example, S&P or Nasdaq or any other index, any other stocks, you can protect yourself by using those futures contract in case you have a big movement down. Is it gonna protect completely from a loss? No, definitely no. We're gonna still have losses, but you can control how much, what's gonna be the percentage in case you have a big movement down from the market. How much you're gonna be able to earn with this fall, so you can compensate with your portfolio losses that you're bought. Basically, what you're gonna do is gonna sell a rate of futures contract. Obviously, that it's a huge strategy. It's not only, well, I'm gonna go here, I'm gonna sell this. No, you need to determine before with a professional what's going to be the allocation of the money that you're going to be buying stocks, what's going to be the allocation that you're going to be protecting by using futures contract. I'm going to get into details of it maybe in another video if you want. So in case you want, type down here below in the comments that, well, Caio, please teach me a technique that I can do to sell some futures contract and protect my portfolio against a movement down, and then I'm going to be able to come and record something for you. It's relatively easy to buy or sell a futures contract. There is not too much secrets behind it. All you need to do is open your account in a broker, and then you're going to type them, well, teach me how to buy or to sell a futures contract, and they're going to show you. It's not a big deal. Also, there doesn't exist a standardized fees or structure of commissions, so it depends a lot on the exchange, on the broker that you are choosing to trade and to buy or sell those futures contracts. If you're a company, if you want to protect against price fluctuation of dollar, for example, you should go to a bank and talk to someone if you have no experience at all. Do not try to do it by yourself, because you're going to really need to build a more deep strategy, a more complex system to protect you. So go to a bank and ask her. They're gonna pay some fees, but yeah, it helps, it works at the end. As promised, now we're gonna be able to talk about ways that you can trade futures contract that exists. And the first one is commodities. Commodities basically is a physical product that the price fluctuates with supply and demand. And it's really cool because you can buy any kind of commodities. For example, coin, you can buy bean, you can buy soy, all of those products that those commodities you can buy through futures contracts. Usually a company that produces dog food, for example, they're gonna buy a lot of futures contracts of commodities because they're gonna be locked in time and price to those products. So for example, if they put a lot of soy into their dog's food, they're gonna be willing to buy a lot of futures contract. So in case the price just explodes, they're not gonna have the same problem with their dog's food. They're gonna be able to keep the price of the dog food, or eventually they will not need to put so higher prices for the dog food. And in this specific case, usually people will receive the physical product. So if they bought soy, for example, soybean as a futures contract, at the end, when that futures contract goes to its end, this company will receive the soy into their local physically there. And as explained before, there also exist futures contracts to currencies. For example, you can trade dollar, you can trade euro, you can trade yuan, you can trade Bitcoin, you can trade Ethereum. All of those currencies, they have a futures contract specified for them. And to this case, you can use for two things. To speculate the prices, okay, so you're gonna be only trading and try to make some money from it, or you can also do it to protect your debt. For example, you have a debt in dollar and you live in a place that your income comes in euro, and then you're going to protect yourself by using those futures contracts. That is the example that I shared with you previously on this video. And in this case also enters Forex. Actually, when you are trading Forex, you are trading futures contracts of currency pairs. So you have there euro against dollar, you have euro against yuan, you have euro against real, you have all of those pairs into Forex. So this is also a futures contract, but you do not have physical delivery into this case, okay? Another kind of futures contract that you have is for indexes. Actually, when you're a trader, for example, you trade in the futures market of indexes, you usually are not trading the S&P itself, you're trading the futures contract of S&P or the futures contract of Nasdaq. Also, this is the good way that you can choose to protect your portfolio against price movement when it goes down. So, for example, if you have a time that the markets go too much down and you sold some futures contract of S&P at some point of time, and at that time the market is completely down, then you're going to be getting some profits from that operation. That's going to help to decrease the amount of money that you lost in terms of how much you were buying that stocks before. Finally, we have our futures contract number 4, that actually is the interest rate. So yeah, you can do trades on interest rate, and there also exists interest rate futures contract. Actually, this futures contract is the one that usually lead what Fed's gonna do in terms of interest rate, because when the market starts to put too much pressure on it, then Fed might fight against the market. That usually is not a good idea, or it can just accept what the market is saying, and then they should, for example, increase the interest if that's the case, okay? But in resume, what I want you to get from this video is what are those futures contracts and how you can use it, and you need to understand that there is a way to use it to protect your portfolio. So when you understand that this really is a thing that you might use also for a company or for personal finance, and including to protect your portfolio, we can go deeper into strategies of it. But I need to understand, if you want to hear more about how to do it in practical term, how you can really use those futures contract to protect your portfolio. So if that's the case, type down below, okay? And don't forget, guys, to subscribe and click on the like button, click on the bell, and share this video with a friend, because this makes a lot of sense to a lot of people that don't yet know what is the futures contracts, and this is the idea of this video. I really hope that it is clear, and if you have any doubt, type down here below, because I'm gonna be helping you with it, okay? So I really wanna to get this idea from you to change some experience here. So please, if you have any doubt, let me know, okay? And also follow me on Instagram, because I show there some of my daily routine, and we can be friends there, okay? It's a better place to know each other, yeah? Okay? So see you next video, my friend.